Credit Suisse monthly economic outlook. With earnings season largely over and the US distracted by the upcoming election, the news to move markets over the next weeks will likely be coming out of Europe. And with us now is Giles Keating, Head of Global Research for Private Banking and Asset Management at Credit Suisse. Giles, the first half of September has been eventful for Europe. Are the latest measures really enough to save the euro?
Yes, I think so. I think the ECB's commitment to unlimited bond buying if a country goes into conditionality, it is a very powerful move. Of course, there are still a few residual dangers. Some people are saying, well, Spain may not go into a programme. But I really think the tail risk, the risk of things blowing up, has been virtually eliminated here. And of course, the fact that the German Constitutional Court is not putting an injunction against the ESM, that's very helpful as well.
And critics are saying that details around the ECB's new programme to buy government bonds are vague. Is this really enough to help Spain and Italy?
I think it is enough because I think the broad thrust of the programme is clear, buying short-dated government bonds in unlimited size once those countries have said they're going to stick to a fiscal programme. That's a very powerful system.
And when we last spoke at the end of May, you said that the chances of Greece staying in the euro were reasonably good, but there is quite a big question mark still hovering over the country. Have its odds diminished? I
would say Greece still looks as though it has a really very high chance, in my view, of staying in. Why? The political commitment, I think, now some of the signals from Germany, from Mrs. Merkel particularly, are very supportive. And although we know there are still debates going on over the details, I think there's a political commitment within Greece.
So given the prevailing risks in Europe, where are the biggest opportunities now?
I think if we look at European stocks generally, they are, of course, on low valuations. Now, that does reflect the risks of low growth and the remaining kind of political and systemic risks. But I think in the longer term that there will be benefits to be had from investing in European stock markets. I think for those who want to be bold, some of those peripheral bonds in Spain and Italy still have the scope to come in. Some of the bank bonds in Europe, I think also still look very attractive. And then, of course, I think global equities generally over a period of time look as though they're paused potentially for an upward breakout here.
And speaking at a forum recently, you also said that investors with a long-term view should not ignore megatrends. What specifically should they be focusing on?
Well, we divide megatrends into big areas, such as looking at demographics and sustainability. Within that, one or two particular areas that I'd single out. For example, investing in themes related to climate change. For example, looking at some of the new technologies like big data.
Finally, you've just stepped out of the Global Economic and Strategy Group meeting. What's the consensus on the outlook for commodities and currencies?
Well, I think on gold, there's now a sense that we've broken up through some key chart levels, and we can actually see gold now trading perhaps well into the 1700s. We're already some of the way there and up towards the 1800 level. Commodities, as always, there's always a debate in the GESG about that. Just at this moment, the euro is recovering against the dollar, but that's likely to run out of steam before too long.
Thanks a lot, Giles. For more information on the latest market movements and trends, visit the website.